Wall Street closes lower following a broad-based sell-off in tech and growth stocks. The Dow snaps a 5-day gaining streak while the Nasdaq corrects nearly 1.5%. Asian markets trade largely lower. Stocks in South Korea slip on political turmoil and weak industrial data. The GIFT Nifty is also suggesting a weak start for the Indian market. Crude prices rise over 1% on Friday, taking Brent crude oil prices to over $74 a barrel. Gold prices slip on higher treasury yields and a stronger dollar. 179 people die as a Jeju airplane crashes while landing at South Korea's Muan International Airport. In a separate incident, Canada's Halifax Airport shuts down after an Air Canada flight catches fire following a rough landing. Hello, good morning. You're tuned into CNBC TV 18. You're watching Power Breakfast and I'm Vinny Motiwala in the Mumbai News Centre. So, yes, Monday morning seems like a bit of a subduedness that we're seeing coming in from the Asian markets this morning, mixed to a weakish opening that we're seeing for most of the markets this time. Now, when you look at it in terms of Nikkei, ASX 200, Taiwan Index, all of them are opening quite flat. Actually, Nikkei is down almost 0.7%. ASX 200 down 0.5% in trade. Hang Seng holding on to some bit of that positive, mild positive that we're seeing there, but that's something to watch out for. Shanghai is quite flattish. Kospi of South Korea, that's quite subdued in trade, given that political turmoil, like we were mentioning before as well as the weak industrial data, keeping some bit of a pressure overall on the South Korean market. But let's look at the Nifty implied open as well, given that we're seeing a bit of a subdued start coming in across the globe. Seems like a GIFT Nifty implied open suggesting a very muted start, 3 points down, so not much of a downtick or an uptick. Very, very muted range-bound trading session maybe we saw even in the last week on Friday as well. Maybe let's watch out for something like that or a very muted day coming in for the Indian markets. So, yes, nothing much of an exciting day that we're expecting today coming in. But let's talk about the US markets, because Wall Street on Friday, that ended lower, with Dow Jones almost falling 334 points, S&P 500 losing 66 points, while the tech-heavy Nasdaq, that fell almost 298 points in trade. Now, the benchmark indices are also headed for a fourth winning quarter, with Nasdaq on the pace for its longest quarterly winning streak since second quarter of 2021. Let's go across to CNBC's Angelica Peebles, who's getting us a wrap on what happened in terms of the action on Wall Street.
U.S. markets were down across the major indexes, but recovered from intraday lows to end the week higher. The Dow fell 334 points, breaking a 3-week losing streak. The S&P 500 lower 67 points, and the tech-heavy Nasdaq dropping 298 points. Consumer spending set to hit a record high this month. That's according to a report from the National Retail Federation, which found spending between November 1st and the end of December could hit between $980 and $989 billion. Driving the holiday spending, wage increases and modest inflation. But there are some warnings on the horizon. A report from LendingTree found 36% of consumers has gone into debt this season, racking up an average $1,200 in debt. And OpenAI said on Friday that it will transform into a public benefit corporation next year in order to remove some of its nonprofit restrictions and allow it to function more like a traditional startup. The board of ChatGPT's parent company said in a blog post that the firm needs, quote, more capital than we'd imagine in order to keep pace in the highly competitive race to be the dominant provider of artificial intelligence software. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But staying with the Wall Street, let's listen to some of the expert opinion coming in on what they had to say about the market as well.
The U.S. has a lot going for it. For example, earnings are probably going to be up quite dramatically this coming year. We're looking for $285 a share for the S&P 500. I think we're above all the strategists on the street, and that's an 18% increase. And I see the market going up on earnings, not on valuation, just on earnings alone. I think there's a lot of upside in the U.S. market. Foreign markets, not so much. As you said, it's kind of a messed up world. I'd love to be a contrarian, and I agree with you're thinking along contrarian lines, but I just can't get there based on what I see in terms of the economic and political fundamentals.
Having productivity boom that we've had recently, this is the best kind of problem the Fed could have to deal with, right? Because this is, very good for the economy, grows the pie faster. What the difficulty for the Fed is trying to figure out of the growth we've had, and we have been living through this. The past 2 years, we have had well above trend growth, and the Fed has had to try to navigate how to get inflation down. At the same time, we've seen disinflation. So a lot of that above trend growth we've had, that was this supply, that was this productivity. We also have had more workers come online. So the Fed does not need to fight that kind of growth. The Fed fights when demand-driven growth gets out ahead of supply, and they need to slow things down.
Okay, on that note, let's move on and look at how these overnight cues are going to be impacting our Indian markets. We have a team of research joining in with us this morning to set you up for trade. Which are the likely stocks to watch out for in news as well? Good morning, Vamakshi. Good morning, Hormaz. Monday morning, is it going to be exciting or no? Vamakshi, what are we watching out for in terms of the trade setup today?
Well, good morning, Vinny. Definitely seems like it's going to be an exciting day. Much needed breather for the market last week after the sharp fall that we saw in the week before. Keep in mind that the markets ended higher despite very thin volumes. And for the Nifty, the 200-day EMA continued to act as a very strong support zone. Of course, we saw some resistance, around the 23,900 to 24,000 mark. So those will be some crucial levels to watch out for today. The benchmark indices took the lead. Broader indices are underperformed, with the Nifty small cap and Nifty mid cap posting minor gains for the week. As far as sectoral indices are concerned, the Nifty Auto surged higher by 2.3% last week, followed by Nifty Pharma. Nifty Metal was the top sectoral loser, down nearly 1% last week. As far as the US markets are concerned, they too had a positive session and a negative session, but a positive week. Nasdaq saw an uptick of 0.8%. S&P 500 saw an uptick of 0.7% for the week, and Dow was up 0.4%, breaking a 3-week losing streak. As far as the cues for today are concerned, not many economic cues on our radar, but 3 new listings: Ventive Hospitality, Senors Pharma, Carraro India are some of the counters that we will be watching out for. As of now, the GIFT Nifty is indicating a strong start to the Indian market.
Okay, thanks for that. But let's move on, and JSW Energy and all the stocks that are going to be in focus today. So we'll start with JSW Energy. They have acquired renewable energy platform that is O2 Power in transaction value is 12,468 crore rupees. Now, obviously, this will expand its generation capacity by 23%. So keeping an eye on that. We have ILFS Engineering, which has been awarded a subcontracting work of around 300 crores from Siegel. So keep an eye on that. Ola Electric, 2 exits coming in and resignations coming in. One is the Chief Marketing Officer, Anshul Khandelwal, and the other one is the Chief Tech and Product Officer, who is also Mr. Chatterjee, who's also been resigning, and this is with effect from December 27. Ugro Capital, keep an eye on that. The board is considering a fundraise plan on 2nd of Jan, so watch out for that. IOL Chemicals, board has approved a share split in the ratio of 1:5 ratio. Also, we have Utkarsh Small Finance Bank that should be in focus because they will be selling their unsecured MFI, that's a microfinance loan portfolio, for worth around 355 crores as on 30th of September to an ARC. So how is that going to be playing out for Utkarsh Small Finance Bank is a key factor to watch out for. And these are the important stocks that you should be keeping on your radar today. But in the world of FNOs, what are we watching out for today? Hormaz is standing by to give us all those cues. Good morning, Hormaz.
Morning, Vinny. And on the FNO side as well, things remain pretty range-bound. And as Vamakshi was just highlighting, it was some much-needed relief that came in for the markets last week. But regardless of that, it still continues to face, the Nifty continues to face that resistance at that 24,000 mark. And that will be the key level to watch out for going into the final 2 trading sessions of 2024 as well. Broader markets were underperformers. The GIFT Nifty so far is indicating a start slightly below the flat line as of now. So we keep an eye out on that as well. But the FIIs are mostly absent, but those who are still around, they remain net sellers in the cash market, as the figures suggest from Friday. The DIIs continue to remain net buyers. Now, the FIIs were net sellers in the index futures as well. They added around 400 long contracts, but also added around 20,000 short contracts as well. Then that has taken the total net short contracts for the FIIs to almost 1.74 lakh. And the clients as well, they added around 2.27 lakh net contracts as of now. Now on the options bit, the 23,900 call has seen open interest addition, as has the 24,100 call. So that the higher levels for the Nifty continues to remain that pain point. And on the downside, the 23,500 put has seen some addition in open interest as well. Now, for the important levels for the immediate basis, 23,700 continues to remain a support for the index, and of course 23,900, as the options data was suggesting, is a barrier. So it's a very narrow range for the index as we go into the last 2 days of the year. And keep an eye out on some names like Mahindra & Mahindra and Escorts auto names, as they have had additions of fresh long positions as well. So keep an eye out on these stocks as well.
Okay, Hormaz, thank you so much for that. Nifty implied open indicating a very flat, and like Hormaz is also saying, range-bound day is also what one could be watching out for. But on that note, we'll slip into a very short break. Don't go anywhere, because after the break, we're going to dive into India's Capex story and how it played out in 2024. So stay tuned. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on. From investments to infrastructure, India's Capex story has been changing the game, especially in the year 2024. India's growth story has been getting a major boost from the massive Capex push. Vamakshi breaks down the year that has been for India's infrastructure boom. Let's go across to her.
India is upgrading from approximately 3 lakh crore in FY17 to a record 11 lakh crore in FY25, capital spending has more than tripled. From the roads we drive on to the railways that connect our cities, from the factories powering our industries to the digital networks bridging our lives, the Capex story is reshaping the nation. This surge in investments comes after a decade of decline from 2011 to 2021. Gross capital formation as a percentage of GDP has rebounded from 28% in FY21 to 34% in FY24, with Morgan Stanley projecting it to reach nearly 36% by FY27. What makes this cycle different is how diversified it is. Unlike the 2003 to 2008 boom, where investments were focused on just a handful of core sectors, today's Capex is spread across 23 to 24 segments, creating a broader and more sustainable foundation for growth. Despite this progress, 2024 has been a chink in the armor. By October, the central government had achieved just 42% of its ambitious 11 lakh crore Capex target, the lowest in recent years. A big reason for the slowdown was the general election-related restrictions. On the state government Capex side, rising welfare spending is becoming a challenge. With the enforcement of the 3% fiscal deficit limit likely to get even stricter, the rise in revenue spending leaves less room for capital investments. This means the heavy lifting will largely fall on the shoulders of the central government. Capex has been slow so far, and hitting the ambitious annual target will need a sharp 60.5% year-on-year growth. As per MK Research, the central government seems on track to meet its target, but the states might fall short by about 0.5% of GDP. Combined, the centre and state Capex is expected to come in at 4.9% for FY25, a bit below the budgeted 5.4%. Nevertheless, as we step into 2025, the sluggish momentum seen is expected to now reverse. Another sign of this activity picking up is the sharp drop in the government cash surplus balance from 2.67 lakh crore in the first half of FY25 to just 28,300 crore by the end of November 2024. Since revenue spending is usually steady, this big dip likely points to a ramp up in large, lumpy Capex projects. Private Capex has been another crucial piece of this puzzle. Data from MK Research indicates that after bottoming out at 2.2% of GDP in FY22, it has now started to recover, reaching 2.9% in FY24. Cleaner corporate balance sheets with a leverage at over a decadal low, along with government initiatives like PLI schemes, robust order book in capital goods sector hint towards an upturn in private Capex as well. So will 2025 truly be the year of Capex? For now, the groundwork has been laid and 2025 holds immense promise. It's too early to say, but with the central government taking the lead and private Capex showing green shoots, all eyes are on how the story unfolds.
Absolutely. Thank you so much for that, Vamakshi. But let's move on to some somber news. Now, earlier yesterday, a Jeju Air flight made a belly landing in South Korea's Muan International Airport, skidding off the runway, killing 179 of 181 passengers on board. Now, according to the authorities, the flight's landing gear was not launched on time, erupting into fire after the flight rammed into a wall. South Korea has announced a week-long mourning period, while U.S. President Joe Biden has offered assistance to South Korean government following the tragic incident. Now, in a separate incident, Canada's Halifax airport was shut after an Air Canada flight caught fire following a rough landing. According to the Canadian authorities, one of the tires did not deploy properly ahead of the landing. So far, no casualties have been reported in the Canadian flight incident. Okay, on that note, we're going to slip into a very short break, but don't go anywhere because after the break, we'll get you what's happening in the world of commodities. So stay tuned in. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now we do have Manisha joining in with us this morning to tell us what are the important cues in the world of commodity, what happened to crude, what's happening around there. Good morning, Manisha.
Good morning, Vinny. Thank you for that. I'll start with the crude oil prices. And yes, we have thin trades right now, but the crude oil prices are headed for an annual decline. Well, the U.S. inventories fell more than expected by 4.2 million, and that would have been supported for prices. But then again, there are expectations of oversupplied market in 2025. The Chinese demand continues to be on the weaker side, and the focus now is completely on the U.S. President Trump taking office in the month of January, and the kind of tariffs and taxes that he could bring about is what the markets will watch out for. Barring crude, if you look at the metal prices, we've seen some recovery come in from the lows, especially for copper. Aluminum also seems to be trading in the positive. So is the case with gold and silver as well, where we are trading 0.25% on the higher side right now. The only thing within the metal space which is not doing well is the iron ore prices. That is trading at a 5-week lows, and we have seen prices decline by 29% in 2024.
Okay, Manisha, thank you so much for the update coming in the world of commodities this morning. But moving on to some updates coming in the scientific world. Now, ISRO will launch its final mission for 2024 from Sriharikota later tonight, where the agency will look to demonstrate in space docking technology using 2 small aircrafts. The technology is essential for a futuristic mission such as sending an Indian astronaut to the moon and the operation of an Indian space station. And with that, we are absolutely out of time on this edition of Power Breakfast on CNBC TV 18. But here's some visuals from the Mumbai's new Navi Mumbai International Airport, where the first commercial flight validation test was successfully completed yesterday. The test has paved the way for commercial operations to begin by May 2025.